Welcome to Making Money. This is Matt McCall. Thanks for joining me. It's September 14th, 2023. As you can see here, we're back in a Florida studio. Not too long ago, you can see in my eyes, a couple hours sleep, got in late last night. But we got a couple great interviews coming up the next couple of shows. But we're also going to talk about the market. We had inflation numbers this week. We have a big IPO coming. And then again, a big interview coming up with Ben Carlson. All that and more coming up on Making Money right now. NVIDIA may be America's top performing stock after more than doubling this year alone. But if you're holding NVIDIA or thinking of buying it to get a stake in the $7 trillion AI market, you're going to want to see Mark Chaikin's new AI prediction first. Mark is a regular in many news outlets from Fox Business to CNBC and built the stock indicator Wall Street uses to find winning stocks. His award-winning system flashed buy on Tesla before it climbed 335%. Moderna before it climbed 300%, and Riot Blockchain before it climbed 10,090%. It also found NVIDIA at the start of 2023 before its massive bull run. But right now, Mark is stepping forward to warn people to stay away from NVIDIA. My system has indicated that NVIDIA is no longer the best stock to buy to profit from AI, is what Mark says. In fact, it just flashed buy on a totally different AI stock. And today, he'd like to hand you the name and ticker symbol of his number one AI stock to buy right now. For a limited time, you can get this information for free at www.aifrenzy23.com. Again, that's aifrenzy23.com for a free copy of his new report. Again, this is Matt McCall. Thanks for joining me. It's September 14th, 2023. It is a Thursday. I had to actually look up what day of the week it is. I know it's Thursday because it's podcast day, but man, oh man, I have been living out of hotels now for several weeks. And if you can't see my eyes, you must be blind because my eyes are burning. I'm so tired right now. But that being said, folks, this is what I'm here to do, to get you some great information, share that with you, educate you, and hopefully at the end of the day, make some darn money. As you know, this past week, we were out in Huntington Beach, California at Future Proof. I got to tell you, it's one of the best conferences I've attended in the last decade. The amount of talent that was there, the amount of information floating around. And there's something to be said when you have a conference that is literally outside next to the beach. Outside. So it rained. You had to go in a little tent for one morning, but it was actually outside. And me wearing this, I may have been overdressed. It was very nice to get out of suits and ties and all that stuffy stuff in conferences where you don't see a window for days. So it was really, really nice. So that whole group put on a great show. And one of the guys from that group, Ben Carlson, he's the director of institutional asset management over at Ritholtz Wealth Management. He's going to join the show here in a minute. If you don't know Ben, you're probably not following the finance industry that well. He's one of the bigger names right now, younger guy. He's written 4 books. He has a podcast called Animal Spirits. And again, associated with Ritholtz Asset or Wealth Management. So really good case coming up in a minute. We're going to talk about where he sees the market now, inflation, long-term, but some big picture stuff that I really think that most investors really need to hear coming up. But before we jump into that real quick, markets, I'll show you the markets in a minute, but it's really been driven by inflation this week. We had CPI come out yesterday and Wednesday. Month over month, it was up 0.6%. Year over year, up 3.7%. The core rate, ex food and energy, was only up 0.3% over month, and 4.3% annually year over year. They were a little hotter than expected on some of the numbers. So you think that the market would actually sell off in that. The market actually was up on the news. Very strange action. Then this morning, the PPI, the producer price index, that's what producers pay to get the goods that they then create and sell to you. Up 1.6% year over year versus estimate of 1.2%. So it came in hotter. The core was up 2.2% in line. But again, stocks this morning, as I'm about to show you, are still up in spite hotter than expected numbers. You can see here in the S&P 500, it's up about 0.4%. But the last 2 days, it has been up. And at the same time, I'll show you the 10-year Treasury. The 10-year Treasury here is really kind of up against the levels not seen in many, many years. And it's not breaking out on that news. That's the yield. You would think that the yield would go higher because you're going to start seeing the market price in potentially more rate hikes in the future. I do not think they raise this meeting, but I think in a November meeting, there's a very good chance the Fed could raise rates unless inflation comes down again. There's a lot of jobs numbers between now and then as well. But I got to tell you, I think the Fed could raise rates. I don't think they should, but I think they could. And the consensus is starting to move a little bit that way. But again, stocks are going up. The other thing is oil hit a new 2023 high yesterday, which is pretty crazy of West Texas Intermediate, what they call WTI. That's the stuff that trades here, above $89 a barrel yesterday. Could that hurt the economy? There's a lot of what ifs right now, folks. And then on the flip side, you have the ARM IPO, which is a big semiconductor company. They priced it at $51 a share, valued at over $54 billion. Could this be the next NVIDIA? A lot of people are saying, well, NVIDIA's run so much, maybe this is next one. A lot of this is owned by SoftBank. I only believe 9% of float's going to be out there. A lot of it's owned by other companies. But we got to see how that reacts. The stock is not open here yet today, but we got to watch. We got to keep an eye on that. And then again, just to remind you, coming up the next couple of weeks, we got a lot of big interviews with some big names. I mean, two people alone sold their firms for over $1 billion. Talking with them, we talked to Joe Duran on Tuesday. Next week, speaking to Ali Webb, the founder of Dry Bar, sold that firm for $300 million. Really great story. A couple themes. AI, obviously a big theme. Alternative investments, big theme. Investing overseas. And we're going to talk a lot, in the next couple of interviews, but then really over the future of this show, how the investment world's changing, because it really brought to light a lot of ways how the investment world is changing. A lot of good views from different people in different sides of the industry. So we took a lot out of the conference, and we're gonna bring a lot to you because I feel there's a lot of great information that as individual investors out there you need to hear. But without further ado, let's jump into one of the bigger guests we got on. And again, he's the Director of Institutional Asset Management at Ritholtz Wealth Management, author of four books, and co-host of the podcast called Animal Spirits, Ben Carlson. Once again, coming to you live from Huntington Beach. We're here at Future Proof. Sitting down with me from Ritholtz Wealth, Ben Carlson, also the podcast host of Animal Spirits, wrote 4 books. The guy's a little bit of everything, in the finance industry, obviously very well known. I've read your books, great author as well. So, you and I might be a little different. And, we're actually optimistic when it comes to long-term investing, what's going on in the world. And we've had a lot of guests sit down and just people in general seem to be a little pissed off at the world right now. What makes you optimistic?
I mean, I'm just kind of a long-term optimist with the understanding that, in the short term, things can go bad and things are not perfect. But I think part of it is just my personality. I was always kind of a glass half full kind of guy. But my general thinking is if you're going to be a long-term investor, you have to think the future's going to get better. And I think that's part of the human condition. You talk about people not being very happy. I think that's almost like a positive because people continuously wake up in the morning and want to get better. And that's one of the reasons that makes me so bullish on the long term. So it's funny. People are like, I wish things were better and I wish I could do this. And I think that's actually the human spirit that makes things better in the long run, is the people not being satisfied with things being better than they were in the past.
Do you think the political landscape has really kind of weighed on people's investing thoughts? And I remember way back in the day when I used to work at Fox News and Obama got elected. And for whatever reason, a lot of my clients, my management firm, leaned right. And I remember getting calls the next day, Ben, get me on market, get me on market. I don't like this guy. Do you think just the craziness going on politically here has really kind of scared people to get into markets?
That could be part of it. That is one thing that we tell people a lot is just keep your politics out of it. You can think what you want to think, but don't let that seep into your portfolio. And if I've done the work before, if you look at presidential cycles and who controls Congress and all this stuff, there's bull markets and bear markets for all of them. It's never what people really think. So I think you want to keep that out of there. I do think the information overload is a hard thing for a lot of people. It's just, there was plenty of bad stuff that happened in the past and people just didn't know about it. And so I don't think our brains are hardwired yet to hear this bad information all the time. I think that puts people in a bad mood.
And, you and I do a lot of media, so we know that negativity tends to sell, right? People love to get wrapped up. They love to look at accidents when they drive by, all that stuff. And I had an old timer tell me on Wall Street 25 years ago, Matt, I could come up with 10 reasons every day for my entire career why you should own stocks. Yeah. But over the long run, it's the best game in town for the average American. So, Ben, where are you seeing any opportunities right now?
I feel like if you would have asked me this question any time over the last 5 to 7 years, I would have said, well, international stocks are cheaper than U.S. stocks. The dividend yields are higher and the valuations are lower, and they've underperformed for a long time. If you look at the cycles, it kind of goes back and forth over every 5 to 10 year cycles or something. The U.S. outperforms, international stocks outperform. And there's a lot of different factors at play, but the fact that tech stocks have continued to dominate and the U.S. mega cap has continued to dominate for a long, long time. We had like this one reprieve in 2022, and then it's kind of back in 2023. That's something that I think a lot of people are frankly giving up on and just don't see a catalyst. You know, things in Europe are worse, and look at what's going on in China, and how could I ever invest in anything outside the United States? And that stuff all makes sense to me.
Yeah.
Like it makes sense, but I think that's the hard part about investing is that, you know, when things seem really bleak. And so I don't know what the catalyst is to cause that change, whether it's currencies or economic something, but that's something that, again, if you'd asked me this 7 years ago, I would have said that would have been dead wrong. But that's something I'm paying attention to.
I'm the same way. We had on Brendan Ahern from Crane Shares. I've been with China with him a few years ago, big research on China. And he said the same thing. He's like, for 56 straight quarters, these investment committees sit down every quarter and come in, they're managing billions of dollars, and they keep saying U.S. And it's because who's going to be the first one to go in and say, you know what, let's move some money overseas? Yeah. You don't get fired as long as you're doing as well as everybody else.
And that's part of it is the flows can have a biggest impact of anything. And part of it too, I think, is studies I've done show that when the dollar is really strong, especially as a U.S. investor, international tends to underperform. And that's something else that it could be just kind of currency related.
I mean, but if you see interest rates coming down next year, and by the way, do you see interest rates? Do you think the Fed, they're priced in 4 cuts next year, which is kind of crazy. Do you think the Fed will eventually cut rates next year?
I wish I knew. I mean, I would have said they couldn't have raised them as high as they can. Yeah. And my point has been politically because the interest expense and the debt. We took out trillions of dollars of debt, which hasn't led to a collapse of the financial system like some people have thought. But it is going to eat into the pie of the government's budget, and I just wonder when that was my whole thinking behind it. And I wonder if they'll have to do that. And obviously, if inflation comes down, then it would make sense for them to lower rates. Yeah. But the number of cuts, I don't think anyone would have predicted they would have raised as much as they have. So I can't speak to the cuts.
No, a year ago they were predicting cuts right now.
Right.
So they keep kicking the can down the road.
It is kind of, and Powell's admitted this. Like, listen, I've looked at all their quarterly things, and they put their estimates out there, right? And I guess he's even said, like, listen, take those with a grain of salt. But you look at what they've been saying for the last 2 years, and their own projections are wildly off of what they're going to do. They're projecting, what am I going to do? And they're still far off. So I don't know how I'm going to be able to predict it.
Exactly. So talk about the Animal Spirits podcast a little bit. What's your focus on there?
So my partner on the show, Michael Badnick, we work together at Ritholtz Wealth for a number of years. I live in Michigan, he lives in New York, and we're constantly sharing stuff with each other, stories we're reading and stuff we're thinking about and podcasts we're listening to and movies and TV shows we're watching. And actually, Josh Brown, who we also work with, him and Michael shared an office. And Josh said, why don't you guys just put this on a podcast? You guys are constantly, he's like, I'm sick of hearing you guys talk. And so we've got a pretty good banter because we're really like best friends in real life. And we work together and we bounce ideas off of each other, and we talk about the markets and personal finance and the housing market and all this stuff, and then kind of what's going on in our lives. And it's one of the most fun things I get to do all week. But it's kind of fun to just have a stream of consciousness just to kind of think things through and about what's going on in the markets.
And I think investors and people who follow you, there's nothing better. It's like having a beer with you, but they're tuning in and listening to you guys talk, right? That's the insight of what goes on, how the sausage is made behind the scenes, and a little look into your real life, which makes you much realer, which is great to see. Yeah. You mentioned housing market. Do you have a view on the housing market here?
The housing market turnaround this year might be even crazier than the stock market, right? If you would have said we're going from 3% to 7.5% on mortgage rates, I would have said, okay, 10, 15, 20% on the housing market prices, especially for as high as they rose, that wouldn't have shocked me at all. Yeah. And people were making that point, that case, and I kind of thought like, yeah, that makes sense. And the fact that it's had continued strength, I think speaks to mostly equal parts demographics of young people wanting to just have household formation and like, I'm not going to wait around anymore. And so demand has outpaced even a lower supply. Yeah. And also the fact that people are locked into these low mortgage rates. Exactly. I tell my wife all the time, listen, we have a 3% mortgage. If rates stay this high, we're not selling our house ever, right?
But how could you? Because if you want to buy a comparable home, right, prices have gone up.
It's way more expensive.
You're paying much more.
I think affordability probably has to be the worst that it's maybe ever been in the United States. I think you could easily make that argument.
I agree with you. And the inventory is so low, though, too. So it's like, what's going to bring the prices down? Because there's people that family formation's on the increase, on the rise. So people want homes, too.
I think this kind of caught the Fed by surprise. I don't think they assumed the supply would drop as much as it has.
Yeah. So before I let you go, what's like something you tell younger people or somebody's getting to this first time when it comes to investing,
they hear the negativity about, oh my gosh, I lost so much money in this stock, that stock got wrapped up in meme stocks and that bullshit. What do you tell somebody out there to really get them excited about it?
I think the hard part to wrap your head around, especially as a young person, is just like the power of compounding. It's you can show someone on a spreadsheet or try to explain it to them, and it's really hard because as a young person, if you're not having a lot of money to save, it takes a while for you to actually see the fruits of your labor. I think that's the biggest thing for young people is like your biggest asset is time, right? I think Warren Buffett has said, listen, I'm in my 90s. I have billions of dollars, but I would trade places with a 20-year-old in a second, right? So you don't have a lot of financial assets, but your biggest asset is your future earnings power and savings. And for most people, saving is probably more important than investing, and also just improving your career and your earning prospects. So you can actually save more money.
Save more money, yeah. Awesome. Well, thank you much. Obviously, books are great. Check it out. Ritholtz Management. Don't forget to check out Animal Spirits, of course. Great podcast. So thanks so much for joining us back.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.